with some more journal entry practice. I put again 3 of these problems in the practice set. It is just so important that you work as many journal entries as you possibly can. The more you work, the easier the rest of this entire semester will be. You really need to be able to write journal entries. You will be doing it for the rest of the semester. And even if you're having to take Accounting 202, you'll still be writing journal entries. This is a staple in the accounting profession, so you want to make sure that you understand the system of debits and credits and how we actually write them. Okay, so moving to this next problem. Make sure I got the right one here. Okay, question 5. And again, we're only going to do the first part of this, and then I'm going to move to the last question and do all parts of it because the posting process is really tedious here. So with question 5, excuse me, we have the Pirates Incorporated. They gave us the following account balances at the end of the semester at the beginning of September, and then they give us the transactions. You won't need the beginning balances here until you actually go to post to the general ledger and then complete the trial balance, because all of these beginning balances should be the beginning balances in the, let me just go here for a second, since we're inching closer and closer to it. When we go to post to the, oops, I went too far, to the general ledger, where you see the beginning balances here, this is where you will drop in these amounts. But again, we're not going to do that for this problem. I'll do the last problem in its entirety. So we're just going to take a look at September 1st through September 30th transactions and journalize them, or record each transaction in the journal. September 1st, we provide services to our customers for cash in the amount of $4,700. So what do we do here? What account gets debited? You're right, cash. And that is for $4,700. The credit, we provide services. Provide services is our definition of revenue. Make sure it's service revenue and don't grab that first one, because remember that deferred revenue is a liability. We haven't earned the money yet in that case. We've earned it now, so service revenue. Record that and move on. We purchased land with a long-term note for $6,400. So we're purchasing the land. Land is an asset, so we are going to increase this asset called land, $6,400. And we did this with a note. So there's a note payable here in the amount of $6,400. That's the end of that one. Number 3, we receive an invoice for $500 from the local newspaper for an advertisement that appeared on September 2nd. So this is an invoice, meaning we have a bill here for some expense. What expense? Advertising. So there's an advertising expense here that we're recognizing for $500. We have not paid the bill yet. So this is an account payable for us. Got it? Let's move on to number 4. We provide services to our customers on account for $6,000. This is on account, which means we haven't received the $6,000 yet. What account? It's going to be accounts receivable, because we will receive it later. And provide services is our trigger for service revenue. And that's what that one looks like. The next one, we purchase supplies on account for $1,100. So we're getting supplies, $1,100 worth of them, and we're going to pay our supplier later. So accounts payable. Okay, number 6, we pay. Remember, pay is our trigger for cash credit. What are we paying for? We're paying for a long-term note. So in this case, we're reducing the balance of that note payable that we took out. So we're decreasing a liability here, and we are decreasing this asset called cash. And that's what that looks like. Number 7, we receive $5,000 from customers on account. So I'm increasing my cash by $5,000, and I am decreasing my accounts receivable, the amount of money that I show customers owe me. They owe me $5,000 less, so I reduce that by $5,000. Number 8, I pay decreased cash for September's rent expense. Let me go here for a second again. Just want to type in the word rent again. You see this account called prepaid rent? Prepaid rent is actually an asset, which simply means that we paid our rent in advance. And this is not unusual in a business setting where you might have to pay 6 months or 1 year's rent in advance, in which case it's an asset because that you just basically bought something that you're going to use for that far into the future. But the only time we would use prepaid rent is if we were not paying for this month, but maybe we were paying for 3 months in advance, 6 months in advance, a year in advance, or whatever. So this is going to be rent expense because it is for this month's rent. September's utility bill is being paid, so utilities expense in the amount of $2,000, and pay credit cash. Number 10, pay employees for salaries for the month of September. So salaries expense, $4,000, and paying means, again, credit cash, $4,000. And record that. And then, this is the last one of the transactions here. I pay a cash dividend to my shareholders. So I'm going to increase the dividends amount by $1,100. And I actually paid this. So there's a credit to cash for $1,100. Let's check our work. Answer is complete, but not entirely correct. Okay, what's happening here on September 20th? Let's go back and look at this transaction. I think my amount is wrong. It says pay $900, and I have $9,000. So let's return to the question and change that to 900. And let's see how that looks now. Complete and correct. Rocking and rolling here. Now let's go to, we're going to skip again 6 and 7. This is posting those transactions to the general ledger. Number 7 is creating a trial balance based upon the balances there. So let's move to number 8, question 8, which is the beginning of the final problem in this practice set. And this is the one where we are going to go through it in its entirety. Let's put those away. Okay, so the first part is very similar to what we've already been doing. We have a list of transactions here, and then we're going to journalize those transactions and then post them and then prepare a trial balance based upon the ending balances in the general ledgers, which is part 9 here. And then the trial balance will be question 10. So we pay rent for Mountain Lodges for the month December in the amount of $900. So we have here rent expense, $900, and we paid it, so that's cash. Record that. Number 2, we provided Provide sometimes is that beginning the trigger. We're automatically thinking revenue at this point because we're a tour company. We provided tours for cash in the amount of 2,800. So this is, click on the link here, cash 2,800 and service revenue 2,800. Okay. Number 3, we borrow from a local bank by signing a note payable, and the note is due in 1 year with a 6% interest rate. The bottom line, all that we need to know right now is that we borrowed $10,000 on a note. We deal with the interest when it's time to pay it, or when it accrues, or at the end of the year, and we'll deal with that in the next chapter or something. Okay, so we are receiving here cash in the amount of $10,000, and we signed a note, so we are increasing our liabilities. Notes payable, $10,000. Record that. Number 4, we receive cash from our customers as payment for a guided tour that occurred on November 28th in the amount of $3,500. What are we receiving here? We're receiving the cash, $3,500. And the credit in this case is going to be for accounts receivable. Excuse me. And notice that that was actually set up in the previous month. So the accounts receivable would have been debited on November 28th. And now they're just now paying us. Let's move on. Number 5, we issue additional shares of stock for $20,000 cash. So we have cash, 20,000, and common stock, credit 20,000. Number 6, I pay employee salaries, $1,200, salaries expense, and I pay it, so there's a cash credit of $1,200. Number 7, I purchase advertising on several local radio stations to be aired during the following 2 weeks. So I'm purchasing this. This is going to be for advertising expense. And I'm paying cash. In case you're wondering, it says purchased it, but it didn't say purchase on account. I purchased it for $1,000. If it doesn't say account, I know that I paid cash for it. Oops, I'm glad I went back because somehow my cash didn't stick there. Okay. Number 8, I provided guided tour to customers in Yellowstone on account for $3,200. So what do we have here? I provided it, so I've earned some money, but they didn't pay me yet. So this is accounts receivable and $3,200. I provided the goods and services, so I still earned the money. So it counts as revenue. The next one of the customers from the December 22nd tour claims to have seen the legendary creature Bigfoot. The company believes this exciting news will create additional revenue of $20,000 for the next year. Did anything happen that affected that basic accounting equation? No. So this is one of those no journal entry required. Okay. On, let's see, number 10, we have here that the company purchased several pieces of hiking equipment to give customers a more enjoyable adventure, blah, 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 for cash of $28,500. Bottom line, cut to the chase, purchased equipment for cash, $28,500. So my equipment account is increasing. That asset is increasing, $28,500. And I did this for cash, so cash decreases by $28,500. Record that. I pay cash on accounts payable $1,500. So accounts payable is decreasing. This is decreasing a liability and also decreasing cash. I pay dividends in this last one here in the amount of $2,000. So dividends, and I paid it in cash. Record that. I definitely want to check these because we're going to move forward and post these journal entries to the ledger. Complete and correct. I'm going to return to the question and then what I'm going to suggest, because posting can be tedious, and what you don't want to do is go to this next question where it's asking you to post these. You don't want to have to go back and forth to the journal to find out which ones to post. So just, I think I mentioned this little secret before, is that students will, and I can't get them all on one screen here, will take a picture with their phones or whatever of these journal entries so that you don't have to move back and forth. So what I will have to do is take 2 pictures here. This is the first one. Come on up. Machine doesn't want to move. That's the end of it. Get out of the way, pointer. So that's going to eliminate my need to go back and forth in looking at posting these items here. So, warning, this next part is tedious. This is not students' favorite part. It's not hard. It's just the back and forth of doing this. So I mentioned already that the first part of this says, the first part of any posting means that you have to go back and get the beginning balances. These are transactions for December. This is a trial balance from November. So these are the ending balances in those accounts in November. In accounting, what happens is the ending balance in one period is the beginning balance in the next period. So these are all my beginning balances for December. The ending for November is the beginning for December. So I need to post all of these as the beginning balances here. You might also want to take a picture of these balances so that you don't have to scroll up and down. So let's take a look at this. The cash beginning balance was $9,200. See what else we had. Accounts receivable. That beginning balance was $4,500. And notice that I'm posting these on the debit side. Okay? Because they have debit balances there. And you can see these debits and credits as they're indicated in the trial balance, the ending trial balance from November. The prepaid insurance account, it had a beginning and ending balance from November, beginning for December of $400. The equipment account had a balance of $24,100. The land account had a balance of $170,000. Accounts payable had a balance of $3,300. Be sure that you switch this one now. Accounts payable is a liability. It has a credit balance of $3,300. Notes payable, dealing with the liability again, it has a balance of $50,000 as a credit. Common stock is a part of stockholders' equity. looking at a credit balance of $120,000. Retained earnings also is a stockholders' equity account, $14,100. Dividends should have a debit balance. Remember that dealer chart, dividends, expenses, assets have debit balances, and that's how you increase those accounts. Revenue accounts would have credit balances. The service revenue account had a $75,000 beginning balance. There we go. Advertising, any expense should have a debit balance. So advertising has a beginning balance of $11,000. Salaries expense, beginning balance of $28,300. And rent expense has a beginning balance of $9,900. Okay, you want to drop those in before you start posting. Absolutely before. That's the first thing you want to do. And now you want to take your phone and go back to those journal entries, starting with the journal entry for December 1st. The first line is a debit to rent expense and a credit to cash. So I want to go to the rent expense. I am going to drop in here a debit in the amount of $900, but I also want to indicate here that it happened on December 1st. Okay, that's the post for the rent expense. Then I had a credit to the cash account. So be very careful when you start posting, especially to the cash account. Every semester I get students who tell me that there are not enough lines in the cash account. What you want to do is put them side by side. So you'll have some debits and then credits on the same line, but you have the indicators on either side of them. So for the cash, I have a credit. You don't want to put anything else on the beginning balance line. But for this one, there's that credit of $900. And because it is a credit, the date should be on the credit side as well. And that happened on December 1st. Okay. The next journal entry said, my phone went out on me. December 5th, cash debit of $2,800. So I may as well do that while I'm here. And that happened on December 5th. The credit was to service revenue. Where'd you go? Here we go. And that is in the amount of $2,800. And again on December 5th. The next item, December 8th, there's a debit to cash. And that is for $10,000. Again, December 8th. The credit in that case was notes payable. On December 8th. Where am I getting the transactions from again? I took a picture of them on my phone. Otherwise, you have to go back and forth and take a look at the journal entry here, the journal entries. And all I'm doing is line item by line item, posting them to these accounts. It's very simple. It's just busy work. And in actuality, I mean, we take you through this so that you understand what the accounting cycle process is. But in actuality, these days, most of your accounting systems are computerized. And when you create this journal entry, it is going to automatically post for you. Let's go back to our ledger. That's what we do. We do this in chapter 2, a little bit in chapter 3, I think. But this is for the most part the end of you actually having to post for the rest of the chapter. So it won't be this tedious moving forward. Chapter 2 is the worst as far as the time it takes to actually go through the posting process. But you do need to understand what's happening behind the scenes with the accounting system here. Okay, let's continue this. What did we do last? The 10,000. So December 12th, we have a debit to cash, and that is for 3,500. And the credit in that case was to accounts receivable. Again, we don't want to be on that beginning balance line. And this is December 12th. Okay, the next journal entry is on December 13th, debit to cash, and that was for $20,000. Be sure you get the right dates in there. The credit in that case is to common stock. Let's go find it. Should be before the payables, or there you go, right after it. Okay, credit of 20,000, and that happened on the 13th of December. Okay, next transaction is a debit to salaries expense. That is for $1,200. That happened on December 15th. That was a credit to cash in that transaction. So we go back up here. Notice I'm not coming down here looking for a new clean line, but I need to post it on the first possible line on the credit side. $1,200, and that was December 15th, I think. Okay, the next one, and I need to switch pictures here. Couldn't get it all on one screenshot. Is December 17th. We had advertising expense as our debit. And that was for $1,000. And the credit was to cash. December 22nd, we had a debit to accounts receivable in the amount of $3,200. And a credit to service revenue, $3,200. And December 22nd. December 23rd, no journal entry required, so no posting required. December 26th, debit equipment. Where'd my equipment go? And that's $28,500. And the credit is to cash. $28,500. That was December 26th. December 28th, I had a debit to accounts payable. I must have paid a bill there. And again, that happened December 28th. The credit in that case is to cash. On the 28th, okay. And finally, debit to dividends. I think that was towards the bottom here. I thought anyway. Where'd my dividends? Oh, here we go. Dividends for $2,000. I sound like I'm on Jeopardy. And that is on the 31st. And the credit is to cash. Now, I definitely want to make sure I check my work on this one. Answer is not complete. Okay, let's see what we did. The first thing I want to look for is whether or not there are any numbers for which I don't have a date. That's one of the easiest fixes. And beginning balance, you don't need a date there. This is going to be fun. I'm almost glad it happened, though, because you will have the same challenges, too. Okay, answer is not complete. Let me make sure I have all the dates here. Going through my phone and just comparing the dates of the transactions. 26, 28, 31st. Oh, I know what is missing. Oh, duh. I'm just trying to make sure all the entries are right. What we did not do is calculate the ending balances for each one of them. So what we need to do now is add up all the debits to the cash account. I'm looking for a debit balance in cash. Because cash is increased with that debit side, then my ending balance in this account should be a debit. So I'm going to add up all the debits, subtract from that sum all of the credits, and if I do that, excuse me, I should end up with $10,400 as an ending balance for cash. This is all these debits minus all these credits. I'm going to do that for every account that we see here. So in the case of receivables, this is 7,700 minus 3,500. I have a debit balance of 4,200. For my prepaid insurance, I'm just going to bring the balance down. For equipment, only debits, so I add them together, and that 52,600 is my ending balance. Land, no transactions there, just the beginning balance brought down. Accounts payable, I had a 3,300 balance. I paid 1,500 on it. My new ending balance then is 1,800. Notes payable, I have a $60,000 ending balance. Common stock of $140,000 ending balance. Retained earnings, $14,100. Credit balance. Dividends, $7,000 debit balance. For service revenues, I'm going to add these three together, and I end up with $81,000. Oops. Trying to give myself some extra money there. Advertising expense, $12,000. Just adding those two together. Salaries expense, that comes to $29,500. And my rent expense, $10,800. Okay. Let's click to check my work, and hopefully it says complete and correct. Complete, but not entirely correct. What did we do here? I'm not going to go back and edit this video and make sure that it's perfect, because this is the kind of frustration that you actually go through when all the numbers don't work out the way they should be. So let's go down and see what we did not do properly. I'm just comparing my numbers to what's on the screen from the journal entries and make sure I did not bring a number through incorrectly and did not post a total the way I should have. 60,140. Here we go here. I put an extra zero. Come on, give me some magic here. Complete and correct. That's it for the posting part of this. The next part is really, really simple. And it's probably the case where you also want to take a picture of all of these account balances as well. Sometimes it's even easy to, I think in the practice problems, you typically can print them out. I don't see the print button here. I'll go back and fix that because I like for you to be able to print these practice problems. But the print button would be over here somewhere, and you could print it out if you chose to, and so that you didn't have to do the scrolling back and forth, or you can do what we did and take a picture of these cash balances here, and that's what I'm going to do. There we go. Now I'm moving on to the trial balance. The trial balance is the simplest thing ever. It's the simplest thing to record, but it is again one where you have to be extremely careful, because if you put a debit on the credit column side, then this thing is not going to match. With regards to a trial balance, there are actually three of them in the accounting cycle. There is one when we post for the first time. And then in chapter 3, we're going to go through some adjusting entries. At the end of those adjusting entries, we will prepare an adjusted trial balance. And then after we are done with our financial statements and we close out our books, which also will happen in chapter 3, then we will do what we call a post-closing trial balance. Regardless of which trial balance you're actually doing, the purpose is the same. You are simply trying to make sure that your debits still equal your credits after this last series of transactions that you have journalized and posted. So that is the only purpose of a trial balance, is to make sure that all your debits are equal to all your credits. All three of the trial balances have the same purpose. So at the end of every time in our accounting cycle where you journalize and post, the next thing to do is automatically prepare a trial balance of one type or another. Okay, so all we want to do here is list every single account that we have and just list the balance in that account. That is all it is. All a trial balance is there. So I'm just going to drop in those totals as I took the pictures of them there. The cash account ended up with a balance of $10,400. Make sure you keep them on the side where they belong. That's the biggest thing here. $4,200 for accounts receivable. Prepaid insurance is $400. Equipment is $52,600. Land is $170,000. Accounts payable, remember that's a liability, that has a credit balance, $1,800. Notes payable, $60,000. Common stock, $140,000. Retained earnings also has a credit balance. That's $14,100. Dividends typically has a debit balance. Think of your dealer chart. That's $7,000. This is that one where you scoot over to the debits and then you go right back to the credit side, because our revenue would have an $81,000 balance. Advertising expense, all your expenses should have debit balances. So we're looking at $12,000 here. Salaries, $29,500, and rent expense, $10,800. So when I'm done here, I want my totals to match. Debits have to equal credits or this is no good. The next step after this would be to prepare adjusting entries, which we will do in chapter 3. Then we will journalize those adjusting entries, post them to the ledger, recalculate the ledger totals for each one of these accounts, and prepare another trial balance, updating those numbers for what happened in the adjusting process. It is from the adjusted trial balance that we actually prepare financial statements. Okay, so this is it for this chapter. Obviously, if you have questions, you want to send me an email and let's talk about it. Well, let's check this and make sure, because we could still have the numbers balance here and something be off up here. So let's check and make sure. We always want to check our work before we push that submit button and we don't have an opportunity to change it. Okay, we're good there. And that's the end of chapter 2's practice.